All right, hey traders, TG Watkins here. It is April 6th when I'm recording this. Hope you guys are enjoying your weekend. We just wrapped up the first of 3 classes with the Moxie Indicator session. So we did that yesterday. It was got it right to 4 hours as far as the class goes. We had a couple breaks in between, and then we did a 30-minute Q&A where we went to live charts. So we've been advertising this, marketing this. We had a really good number of people in there, a lot of people, a lot of interaction. So people loved it. Those of you who are not familiar with Moxie came into the class. And we were still running the class, so if you guys are interested, you can still get that, even though it's now recorded. And then we've got 2 more classes coming up, 0 DTE on Tuesday, and then next Wednesday we're going to do the ETF and leveraged ETF class coming up. So that'll be some fun stuff that we're working on. All right, as far as today goes, what we're looking at is we're going to be going through the major indices, breadth with the put call ratio, the VIX, all that kind of stuff. And then these are some of the stocks that I'm going to be looking at. I'm going to talk about the trades that we have been taking, and then the couple of stocks that I'm going to be looking at for whenever this market bottoms to go up. We're actually in Rocket Mortgage right now. You should take a look at this thing compared to what the market did last week. So it's looking pretty strong compared to everything else. The other thing that I want to mention is, and I'll have this link in the description for you guys so you can go back to it, but this one, who will be trapped and panic next week? This is where I laid out basically the 2 paths. If the tariff news was already priced in and Trump didn't come out and basically double down with tariffs and said, you know, okay, we're here and we made some negotiations and things are cool, we could have totally seen the market move up because the market was at a double bottom. You know, we saw Monday where price had come down, and this was like last week before all this came out, and I said where we're going to come down here, we should see price come up to here, you know, the hourly 50, and if it's going to be bad, we'll see it come down. If it was going to be good, then we could see it come up, and then we'd see it go that way. So that was the 2 paths where we could have gone. If the market had already priced it in, and the tariff news wasn't as bad, cool, we could easily go up. If the tariff news was bad and the market didn't price it in, and basically Trump doubled down, because remember he came out with that sign and where everything was like, yeah, we're doing half of what everybody else is tariffing. And of course there's news about that. The market's like, oh no, and it just absolutely crunched. And so that's where we went down. And it went down exactly how I had described it, you know, the week before. So do check out this video if you haven't seen it. You don't have to watch the whole thing, but you can see here right around 6 minutes or so is where I start to talk about the paths of where this could go. And it definitely shows the downside, yeah, which way is going to go. So who panicked? Yeah, the bulls panicked and the bears won. So that's for sure where that went. Okay, so we got that. So let's kind of go to some of the live charts and we'll discuss all this stuff. Okay, so then we come over here, we look at the S&P. Yeah, clearly, big down moves. You can see here right there, like from that video that I showed you, we opened Monday with a gap down. I figured that was going to be around a double bottom, kind of a flush out. And then we rallied for 3 days right into the underside of a downtrending hourly 50. Now, I know the Moxie indicator is above 0. Just remember, it's a momentum-based tool. Of course, you know, news trumps everything, and Trump certainly trumped everything with the news. And so that's where it broke down, okay? Immediately after he started talking, like the market went up and then it rolled over. And so we knew right after he started talking that we were going to be getting a down market. And even coming into Friday, like Thursday was still pretty heavy. And the internals were heavy, everything was heavy. And then sure enough, this was going to be a down day and we still closed at the lows. So there's still a good chance that this Monday, tomorrow, when the market opens up, we could still open with another bit of a gap down. Like unless some news comes out in the next few hours before the market goes up that somehow turns things around a little bit, I think we should expect probably a down move, maybe a gap down, I don't know. But I'm then wondering if this is going to be a bit of a flush out and maybe we can kind of get some sort of bounce. I don't think it's the low, you know, the narrative hasn't changed. I think we're still going to be in call it a bear market or a major correction or whatever you want to call it, but we're going to still be pretty heavy out there. And so I'm really not interested in the majority of stocks. I mean, unless you're shorting stuff, I'm just not interested in it because the overall narrative of what's happening with the market and the tariffs and stuff, like none of that has changed yet. So unless something happens there, we should expect that there's still going to be some chaos and turmoil, and basically people don't know what's going to be happening and you know, where these things are going to land and how much it's going to cost and how much negotiation and all that kind of stuff. So yeah, just understand that. But we have been trading through this and we've been doing pretty well with it. And I'll show you the GDX trade. We made 22% basically overnight because we shorted it. And so that worked out very, very nicely. Now, even though Monday would probably act as a gap down, I think at some point we're just going to get a technical bounce. Okay, it's kind of the same reason that we got a bounce here. Clearly the market was still heavy, but it reached some areas where everything was kind of stretched and then it just kind of reversed. It's the same reason why we even bounced here. So there are bounces in downtrends. In fact, some of the biggest up moves are during down markets because of short squeezes, okay? Just because of the short squeeze effect. So that's one thing that I'm going to be looking at and wondering. We know the VIX is huge. The UVIX is way up there. So we do have some strategies to be trading for that whenever we do get a bounce. And then I can talk to you guys about breadth and the put call ratio, and we can kind of talk about that and just kind of see if we can hone in on when this bounce is going to happen. It's a little risky, I think, to want to keep shorting in through here because after a couple massive down days, everybody's kind of loaded up on the short side. And it's like, how long until the plunge protection team comes in? So get what you can on the downside, but then also realize that as soon as something turns, you don't want to stick around too long on the downside. If you were short, you did a great job. You're getting paid. Try not to be too greedy on the short side. Okay. So that's what we're looking at there. I mean, what else is there to really say about this? It has been, really pretty tough as far as how the market has been coming down. Let me get the right screen. And just everything's been broken down. You can see here right at the weekly 50 came down. It's been breaking the monthly 10. Like obviously we all know what direction this is going. It's really just the key was that last week came right into the underside of that hourly 50. You can even see this trend line continue to get broken to the downside. And now we just need to kind of wait for any kind of change to the upside and see if we get a little bounce or something like that. And then we'll see what kind of news there might be out there at the time that might, motivate the market to do anything to the upside or just, stop going down. So again, this market's going to be very news driven. So looking at the NASDAQ. Oh, and then last week, just so you guys know, we took 3 0DT trades last week, and we profited on all 3 of them. So we were 3 for 3 for last week as far as day trades with the 0DT stuff. And so that's going to be the next class I teach on Tuesday if you guys are still interested in that. NASDAQ, basically it's the same thing, just kind of looks a little bit different, but right here at the hourly 50, it rolled over to same deal, massive amounts of volume. And at some point there will be a flush out and then we'll see if we get a bounce. IWM, basically the same kind of deal. What else is there to say? These things are down right into the hourly 50, pretty key level, broke down, and now we just have to see where does the market want to say, that's a little too far and bounce. It's interesting though that the IWM I actually see here has made higher lows on Friday as opposed to the rest of the market, which was making lower lows. So nothing to do with that yet, still too early, but thought that was interesting. And then the Dow, same kind of deal. I mean, just, real heavy in here. The other thing I talk about, a lot of people are maybe looking at this as a double bottom. I was looking at it too. But remember, a double bottom only works when it works. Otherwise, it's a resting area until price moves lower. And that's exactly what this was. It was a resting place until price moved lower. And it was basically 100% based on news. That means that this was a bear flag right there. It tested support, it bear flagged up into resistance, and then rolled over. That's what the entire market did. So, and then the semiconductors, we did take a put credit spread on this right here. I was accurate that the market was going to bounce a little bit, but it didn't bounce nearly where we needed to. And then this thing rolled over. So, just kiss that put credit spread goodbye. So that's toast. Because I was hoping that if the market was going to go up, here was the flush out. I wanted to see if we could actually kind of come up a little bit further before rolling over. But all the markets got stopped at that hourly 50 and just, continued to the downside. So, that trade didn't work out. And then we'll just have to see what happens this week if can we get a bounce. All right, so then let's take a look at breadth. Let me kind of show you guys here 2 things. Actually, not breadth. I want to show you guys the new highs versus new lows. I had to really zoom out to really get some context for this move, okay? You look here, let's just say the number is 546. That's pretty big, okay? I mean, you look at the market and you just see this thing falling off a cliff. So, we're expecting a big number. But what does that mean? If you look back here, you can see it is about equal right here, if I can draw a straight line, to kind of the bear market. That was kind of the first low, and then the ultimate low is right here, and that was all about, call it 546 as far as the lows. So again, this could be a little bit of an indication that the market has reached a low. Now, I think COVID was its own little thing. I mean, that was like everything. The world was coming to an end kind of thing. So that thing obviously got to 1200. I mean, everything was down, okay? That was pretty wild. But for a mostly run-of-the-mill bear market where we knew that inflation was high, interest rates were going up, the market had to work its way down, we got up to there. This is a little bit more of a panic. This is like, oh my gosh, what's going to be happening with trade and commerce and stuff, and how much it's going to cost, and we're up here. So these are indications, just now, for now, indications that a lot of names have reached new lows, and it could be a sign or signaling that we're pretty close to a bottom, simply because just, my gosh, everything is so low that at some point they tend to turn around. All right, now if we come over here, we look at breadth. I mean, just look at that chart on the S&P dropping off like that. Here's another indication that we could be near a low. Again, all of this is maybe until we actually see things turn. You don't want to just catch a falling knife. But look at this. The number of stocks over the 20-day SMA, 6%, okay? And you can see, actually, let me kind of scroll up here because you just see these numbers are so far down. It's like, what kind of context do we have? And you can see here, when the market around December bottomed, it was right around 6%, okay? That was the low, and you can see we finally got a bounce. Back here, there was another pullback, 6%, and then it bounced. So everything is down. I mean, literally everything is down, that at some point, you can't go down much further unless it's like, people keep talking about 1987. Again, I don't think this is a 1987 situation. That was very structural as far as a new product that had come out in the 80s that had backfired and created a snowball effect. That's not this. This is people being like, okay, I don't know what our economy is going to look like. We're also trying to do austerity with the shrinking government. And so, everything just has to get repriced. So from a technical point, we can kind of be low. Same thing here. 13% of stocks are above their 50-day SMA. Yeah, that is extremely low. In fact, let me show you a different chart. If we come over here, SPX A50R, this is the 50-day SMA breadth. So we're at, according to this one, we're at 11%. Let me get the line here. So if at the bottom of the bear market, we went down to about 5%. Again, pretty low, but you can see 11%. Here was a low, here was a low, here was a low. Even here, we got down to about 18%, and now we're at 11. Just another indication that we are so smashed that this could actually help put in a temporary low. So, of course, the news is bad. The market's freaking out. But again, we know the market doesn't just go straight down forever, and that there are bounces and stuff. So this is why I'm saying, if you are short, hey, pat yourself on the back, take your wins, take your profits. But if you're looking for an opportunity to play anything to the long side, maybe we're getting close. We'll have to see what Monday does, and then we'll have to give it some time to actually see if the market wants to turn around. But just know that we're getting to extreme levels, and extreme levels is where things tend to turn, okay? So then the other thing I can show you is the put-call ratio. This is something we were talking about in the class yesterday that we taught right here. I mean, look, we're almost up to 1.4. This is definitely 1.3 and change. So on the daily basis, 1.4. That's, again, huge. So everybody's loaded up with puts. And again, when this thing gets pretty darn high, that tends to signal at least a bottom. I think the more major bottom will be whenever the 10-day moving average of the put-call ratio actually gets closer to 1. So we've still got some work to do, okay? That's why I'm saying I don't think that this is like the bottom of the market and we can start actually going long on everything. I'm just talking about we might be so oversold at an extreme that we might actually start getting a bounce that we can work with. Okay, so that's just kind of pointing that out. And then the VIX and the UVIX, again, we're pretty far up there. I mean, look, we're at 45. I think this was the yen carry trade, which, I mean, look at that, 65. That went up there. So we're at 45. Let's see, the bear market only went up to about like 30, 40, went up to 40. And then you can see here, of course, COVID, went even more, but that was a little thing. So we're not as high as other things have been, but those have been severe panics. We're here at, again, about 40. I forget what date. Oh, that was the taper tantrum, and Jerome Powell was raising interest rates when the market said, no, we don't want that. So that got up to about, 50, 45 area. So again, we're kind of up to an area where the VIX has spiked to an area where I'm like, well, it doesn't go much higher before we start reversing. Gosh, even 2011, and again, you can see here 45. So, and then here 2010 got up to about 45. So yeah, we're getting to areas where it's a little bit risky to be short, and we should see if there's any kind of turnaround, any kind of bounce for this. Okay. And then you can see here the UVIX has also had a really big move on that. Perfect Moxie setup, actually. This is what I call a trampoline move right there. So price below the 50, Moxie indicator above 0, and look at that pullback right into the hourly 50. It did actually work out perfectly, which is the same situation you can see back here when the first low happened. The VIX, the UVIX set up just perfectly. All right, so then let's take a look at GDX. Now, we took 2 trades on this. We took a trade to the long side, trading GDXU, and we took a trade to the short side with GDXD. So these leveraged ETFs, regular and inverse, are some of the things that I work with, and there are certain cues that they give me that normal ETFs don't, or normal markets don't. And so this is going to be some of the stuff that I actually teach on the 16th. So next Wednesday, we're going to be teaching this ETF and leverage ETF class in order to show you guys like some of the clues that I saw with this. So we went long GDXU right here, and we exited here for 29% gain. And then on Thursday, we shorted GDX by buying GDXD, and we sold it basically the next morning, Friday, for a 22% gain. Now, I'm sure this is down a little bit more, could have made a few extra bucks, but with a move that basically went exactly where I thought it would, or at least that I wanted to. I thought this was going to take 3 days to do. It took 1. It took a few hours, and then we just cashed in. I was like, great, works for me. I'm happy with that trade. So whether you want to do it with stock or you could do it with options, it's up to you. I tell people what kind of trade we're taking, why I'm taking it, and then you decide what you want to do as far as the setup. All right, and then we had TSLL. We took a bigger position on this back here, and we sold half for about 37% there. And then it did dip, which I was expecting, and then it came back up, and I wanted to see if this thing was going to go. Like, if the market was going to be bullish, tariffs priced in, then Tesla would keep going up. But I was getting a little bit nervous. So actually, it was the day after. It was amazing. It was the day after the tariff announcements. The market was crunching. Tesla actually bounced. So it was pretty incredible. Let me show you over here. You can see here on the 15, it came down in the first, 5 minutes, and then bounced. We exited, and then it started to roll over. So Tesla still has a relative strength, but you still don't want to be long right now. So we exited our other one for 30%, if I can just get that right, about 30%. So we made 37% and 30% on our trade for that one. Now, Root was just a garbage thing. I totally screwed this one up. We got an entry here, an entry here. It did get up here. I should have taken it. It hit all my parameters for saying, hey, you should at least take profits up there. It turned around faster than I expected it to. And then I was really thinking, okay, is this market going to bounce? And you just look at this thing. It screamed down. We did get stopped out. So, I want to show you guys the good, the bad, and the ugly. We had some great trades. This thing just, it was good. And then it just flopped on us. And I got stopped out. And then Genie, this is kind of that thing that I wish I had done with Root, because we got in here, right there. We took half off here for about 17% gain. And then when I could tell, okay, this is not going to hold up, we exited the other rest of it for 3%. That's how we should have handled Root. Take some off at the top, and then if it starts to fail, at least you take the other half off for a profit, even if it's a small one. But Root just turned on me so fast, I was like, oops, okay, I guess that's not going to work. All right, so here are the 2 stocks. One of them is an ETF that whenever this market turns around that I'm going to be looking at. It's going to be FNGA, which is the leveraged ETF of the FANG stocks. You can see here all the notes and stuff. I trade this thing all the time because basically it's the FANG stocks. It's the Magnificent Seven with some Chinese stocks in there too. I trade this because it's leveraged. Of course, if I didn't want the Chinese stocks in there, I could trade MAGs, but MAGs is not leveraged. And so this is my option. And what we've been looking for in through here is whenever the market bottoms, I think this will be like you could trade SPXL, TQQQ. If you want to trade the indexes, because again, I think that's going to be kind of the safest because this market's still challenging. And even if the market bounces, we don't know which stocks are going to really bounce. Okay, so I rather kind of trade the market as opposed to individual stocks. And usually, since, well, the Magnificent Seven are the market, they're so big that they move the market, I rather just trade them. And I don't want to pick which one's going to do well, so I rather play the ETF, and then I rather play the leveraged ETF. So this is basically my trading vehicle. Tesla can also be the same thing. Again, they're kind of going to all move similarly. Tesla moves pretty big, which is why I like it, because I like movement, and I don't want to play Apple. Even leveraged Apple, it just doesn't do it for me. So this is what I'm going to do. There's enough percentage. Even if we bounce back up here, look at that, it's 46%. That's awesome. I don't know if it's going to happen. I'm just trying to show you how much scale is available in this. So FNGA would be my vehicle of choice for whenever this market bounces. I will also be trading options on SPX and some 0DT options on SPX whenever this market does what I think it's going to. Okay. And then we look at RKT. This name has actually been doing amazingly. I think part of the reason is that interest rates are going to be coming down. They're coming down. They're going to come down. The rocket mortgage is probably going to benefit from that because more people are going to be doing stuff with it. It's just basically related to housing, of course. The other thing is they bought two companies. They bought Redfin and they bought Cooper. So that's where you see these big volume things. So I think this was Redfin and this was Cooper. Now, of course, the company that does the buying, their stock goes down because they just had to shell out a lot of money. They just picked up a liability, basically. It cost them money. So they go down. The company that gets bought, say Redfin, they go up because they get bought out at a premium, okay? But the fact that this recovered right after that purchase and then recovered right after the purchase and it's going up as the market is absolutely getting demolished, boy, looks good to me. So yeah, we bought this one and we're up. We're slightly positive right now. I wish I had bought it just a little bit earlier that morning, but we were trying to figure out what's actually happening with the market. This is also following my Moxie patterns. Again, trampoline move right there. Price into the daily 50, Moxie indicator above zero. We got a Moxie price trigger here on the hourly. So it is following the Moxie rules, and it's like one of the few stocks that I see is actually doing well in this market, and it's bouncing right back after purchasing two companies. So I think the market is saying this actually is looking great. So that is the other major stock that I'm looking at and we're trading and we're in. Okay. So hang on to your hats out there. I hope you guys are surviving and doing well. We're having some good trades out there. The GDX trade was pretty great. Rocket is looking great. And now we just kind of see what happens on Monday. And I'm going to see if we can get a bounce. And then we'll play that this week. So good luck, guys. Hope to see you in the room. Remember, you can come in underneath a trial, or if you're interested in the class, we're still running that. And we'll see you this week. Have a fun time. See you guys.